My dream with that site, it sits on 32 acres, is to create a true city within a city, to where if you never wanted to, you never had to leave. I'm really good at finding deals that if everything goes wrong, we can still flip out of it and make money.
All right, welcome to another episode of the Radical Hospitality Podcast. I'm your host, Zeke Freeman. Today, we're joined by Tyler Cauble, a commercial real estate investor, advisor, and one of Nashville's most forward-thinking voices on neighborhood revitalization. Tyler is known for transforming neglected spaces into thriving community anchors, focused on adaptive reuse, creative leasing strategies, and investing that breathes life back into local neighborhoods. He founded CRE Central and the Cauble Group, and Hamilton Development, where he leads commercial acquisitions, developments, and leasing across Nashville. Tyler's also a content creator and educator with a strong online presence, helping thousands of aspiring investors understand the commercial real estate game through practice and transparent insight. So I'm looking forward to diving into all of this. He's also got a really cool boutique hotel project going on that I think all of you guys out there in the boutique space are going to love. So Tyler, welcome to Radical Hospitality.
Zeke, excited to be here, man. Thanks for having me on.
Yeah, man. Well, I've been following your journey for a while. You're putting out a lot of great content, helping a lot of people. So thanks for what you do. Would love to start with just a little bit of your background, how you got into this commercial real estate journey.
Yeah. So I dropped out of college after my freshman year, moved back to Nashville, and got really lucky, man. To be honest with you, I got a job offer to come be the in-house leasing agent for a boutique development firm here in Nashville. And so cut my teeth on office, retail, and industrial properties, but also got some experience on the development side. So in 2015, put together my first development, which was 42 townhomes, about 15 minutes southwest of downtown Nashville, and completed that in about 2018, launched a book on how to lease commercial real estate, left and started my own firms. Since 2019, really, that's when we started raising capital, doing our own projects. We've acquired over $75 million worth of assets. We have a very eclectic taste when it comes to the types of projects that we like to do. I call myself product type agnostic. I will invest in anything that makes sense and has a story, as long as it's within the neighborhoods that I like to invest in. So that's largely East Nashville and Madison here in the Nashville area, and then South Chattanooga. And we've got projects going on all over, but for me, it's more about what's the neighborhood. Let's go study that and then determine what it needs from there, and we'll deliver that. So I've done everything from a 6-bay car wash that we converted into 5 micro restaurants and a bar, which was a pretty cool project, very small one, but it won a ULI Excellence in Development Award,
Heck yeah.
which we're very proud of, all the way to a 48-key boutique hotel. I've got 1.5 million square feet of historic, wool factory that we're converting into a mixed-use town center. So I like to keep myself occupied with a variety of things.
I love it. You're really creating cool spaces that public people get to enjoy. What brought you started in the multifamily, doing townhomes, that sort of thing. What kind of led you to go commercial real estate versus residential? What's kind of the pros, cons there?
Yeah, so on the multifamily side of things, we built a for sale product, right? While I was at that development firm, we did do a 144 unit apartment complex. And it was really around 2018 that I started to see a massive shift in the market, where you had larger institutional level groups that started really gobbling up everything. Multifamily syndication started off as friends and family, and people would go buy apartment complexes. There was a lot of meat on the bone. And, around 2018, 2019, cap rates compressed so much that the returns doing those deals, in my opinion, unless you were, institutional and had, cheaper capital, it wasn't worth getting out of bed for. And commercial, there's so many interesting and fun paths that you can go down and still make great money doing it. So that's why. And also, I just don't really want to own anything where people sleep and live, right? Hotels is one thing, but where people live is it's something different. I'm writing a book right now it's kind of my manifesto on why commercial real estate. The working title, which maybe will end up being the final title, is I won't evict single moms and other musings about commercial real estate. For that exact reason, it's like no matter how good of a landlord you are, there's a chance that at some point you'll have to choose between evicting that single mom who can't make her payments or making a bad business decision and losing money on your project. So it's just not a situation I ever want to put myself into.
Yeah, yeah. I mean, a lot of our audience, like we're diving into boutique hotel space, and they're doing cap rates and are kind of focused in that niche. It's interesting, that you've become agnostic on the type of commercial real estate. How do you keep yourself out of trouble and enough knowledge base when you're looking at a variety of different projects to make sure like this one works versus this one doesn't?
You still have to niche down, right? And so understanding a neighborhood to the deepest level possible is very critical. The East Nashville, Madison, I spend 95% of my time in those two neighborhoods. I live here, I eat here, I work here, I walk the streets. When I'm on a phone call, I can't sit still, so I'm out
Yeah.
pacing all the time.
Are
So you
those
just get to
neighborhoods like
know.
in a growth path? Is there, other than being there, is there a reason you chose those areas in Nashville?
Yeah, I mean it's the quote unquote wrong side of the river, right?
Okay.
So all of the bigger guys invest on the south side of the river. So we're on the wrong side, which means plenty of opportunity, but it's just on the other side of downtown. And so if you look at it geographically on a map, I mean, there's no way that Nashville wasn't going to expand into this side of town. And so, now we're seeing in East Nashville, Oracle announced a 60-acre campus. The Titans are doing a $2 billion stadium, which is the largest stadium ever built. That's all at the base of where the majority of our commercial real estate investments are. And it's not like we're geniuses, man. I mean, I didn't, I'm not some oracle that predicted the future. You just look at it on a map and you're like, well, yeah, we're 5 minutes from downtown. Of course, this is going to take off at some point with how explosive Nashville's growth has been. So I chose them honestly because they're the cool side of town, right? It's probably the Boulder to Denver, right? It's the Portland, it's the Brooklyn to New York City, right? It's a little more artsy, it's a little more entrepreneurial, it's a little more community and neighborhood focused than most of the rest of the city. And that to me is very important, right? I love being a part of the fabric of what genuinely makes a community.
And then when you're going in and you're now, so you've kind of chosen that target area, one for, it sounds like location, path of growth, and it's got that like cool hipster factor, artists and that sort of thing that are coming in, which I love. So is there opportunities that are in that neighborhood that, are, I'm sure there's some that are good, some that aren't. What do you go into when you start underwriting a deal in that area, and what's kind of like your checklist of go no go?
Yeah, I mean, the nice thing about focusing on a neighborhood is one, you get to know all of the players super fast, right? I never have to do market research. I mean, I don't have to sit there and go, I wonder how much it will cost to build this. And I wonder what the comps are. And I wonder, what we could possibly lease this for and who might be in the market looking. We have a constant finger on the pulse of the market. So it's very easy for us to do quick back of napkin math and get a yes or no. There's plenty of opportunity. I love the deals with hair on them because that's typically not something your bigger guys are going to want to focus on. They want the easy stuff. And, we can come in on, we like to focus largely on like sub $5 million deals. So the $1 to $5 million range, we will do 10 to 20 every now and then. That's more rare. The deals that I could come in and have kind of an outsized impact for the type of project it is on the neighborhood is fun, right? Like the wash, that was the car wash that we converted into micro restaurants and a bar, 2,400 square feet, right? It was a $2.2 million project. We have 6 small businesses in there and 3 parking spots. But despite that, there's 80 people there on the patio on the weekends, right? So talk about an outsized impact on the community. That's the type of stuff we like to do. But when I'm underwriting, to me, it's like, what's the X factor? What could we really do here that's cool? Probably very similar to you being an architect and a developer, you're able to look at projects a little more creatively and a little more differently than your typical developer. That's kind of my approach is what is the out of the box approach to this project that would really give it this X factor that nobody else can compete with. And that's really largely what we build our projects on.
And so for like the car wash, something that's a little bit unique, it's got a different back end. You got to have some leases on it. How are you putting together the capital stack and underwriting these deals to actually get them moved forward and developed?
Yeah, that one's a funny one. I mean, it had never been done like that before, right? I mean, you're talking about essentially retail facing ghost kitchens, and we couldn't find a single comp of a property that was similar. You look at food halls, it's like, okay, well, that's kind of it, but they have all of this space inside, right? We didn't. Ours is, I mean, they're literally 380 square foot units, right? With a walk up window. And so, the underwriting that we did was really thrown out the window on that one. Fortunately, we were able to lease it at a rate that makes sense. But those tenants, I mean, on a per square foot basis, it doesn't make sense. It's 3 times, 4 times market rate for restaurant space in Nashville. But because they're 380 square feet, it works on a monthly basis for those tenants. So the capital stack on that one was actually pretty simple. It's me and 3 other guys. We didn't even syndicate it. We've got an architect involved, we've got a contractor involved, and then the seller. He actually ended up partnering with us on it. So just the 4 of us, pretty simple. But it's something like the hotel. We went out and syndicated that. I have probably 35, 40 investors in it, and average investor placed $100,000. So we raised about $4 million for it. So That's a very different capital stack.
Yeah. So let's hop into before we hop into the hotel. So what was kind of the total project size on that car wash compared to the hotel where you're putting your capital in versus you're going to a syndication?
Sure. Yeah. So the total cost of the wash was somewhere around 2.2 million, give or take, including land, including everything. Right.
And did you guys bring in debt as well?
We did. Yeah. So I think we put down 25 or 30%, somewhere close to that. We just brought in a local bank for the remainder. And then the hotel is about an $11 million deal. And we are probably close to a 70-30 split on that. I'd have to run the math, but roughly $4 million in equity, so $7 million in debt, give or take.
Okay. Well, why don't you give us an overview on Salt Ranch and your hotel project?
Yeah. So Salt Ranch is a project that I was, it was an old Congress Inn sitting on 2.5 acres, about 10 minutes from downtown Nashville. You could see the skyline at a lighted intersection right next to, 2 minutes off of a freeway. So very quick access to downtown. And I'd driven past that site for years, really wanted to get my hands on it, had been trying to buy it for years. And finally, back in 2021, they decided, yes, we'll sell it. Back then, it was a 52-room roadside motel. Very rundown, not a very nice establishment, not somewhere you would want your family staying, that's for sure. And so when we bought it, we immediately shut the whole thing down, fenced it up, and started working on our renovation plans. We had to close quickly on that one because the seller said, okay, if you want this so bad, close in, I think it was like 30 days or 60 days. So we just didn't have time to put any plans together. So we closed on it, finalized our plans, ended up deleting.
Close on it. Did you guys just bring all cash, or did y'all bring in like a hard money?
We actually used hard money. Yeah,
we
used cash and hard money.
Okay.
Refinanced it out in about 3 months. And so we deleted 4 rooms. We're 48 key boutique hotel now. The original structure in the middle of the property was built in the 1850s. It was actually used as a hospital in the Civil War. The motel buildings around it were all built in the 1950s. And we essentially did a full gut renovation, redid all of the rooms, added a pool. And, because we sit on 2.5 acres, I really wanted to lean into the campus aspect of this. So we've got a 6-foot privacy fence around the entirety of the hotel. I wanted it to feel like a resort, like you really found yourself somewhere once you arrive. And because of that, I wanted to brand it and design it in such a way that no other boutique hotel in Nashville really has, which is this true Nashville hospitality. I'm an actual Nashvilleian. And one thing that I always get annoyed at with boutique hotels in Nashville is that most of these developers think that, getting a picture of Dolly Parton and slapping a guitar on the wall is Nashville. And while part of that is true, that's not our entire identity. So this hotel is really the Nashville that I grew up with, right? So true Southern hospitality meets Palm Springs. And that's kind of where Salt Ranch comes from.
So it looks like you took out the whole center parking. How did you get to put in this new pool amenity? Is that right?
That's correct. Yes, sir.
How'd you guys deal with parking on the site?
Yeah, so there's actually we could have removed more parking, and that's a travesty of Nashville's codes that we didn't. But we had more than enough parking on site. All those spaces that you see right there in front of these two front buildings, we planned on deleting those as well. I was actually going to rip up all of the asphalt, turn that into permeable pavers and grass, make it a really neat little area, and essentially like a true courtyard. The problem is the city of Nashville was going to require us, since we were disturbing 10,000 square feet of soil, to completely re-engineer the stormwater for the site. And so, which is insane. And so I said to them, so because I'm making the ground more permeable to absorb more water, you're going to make me re-engineer the stormwater. And they said yes. And so I said, okay, so if I don't touch this asphalt and I don't disturb 10,000 square feet of soil, I don't have to do anything. They were like, well, we would prefer if you did something. I was like, no, I'm not doing that. I'm not going to spend money just because you want it. So unfortunately, we didn't do the courtyard. We didn't do the permeable pavers, but it saved us quite a bit of money in stormwater retention.
Yeah, unfortunately, spent a lot of time in planning zoning, and a lot of those groups just focus on their checkbox versus actually holistic thinking of what's the objective here. So part of the game, I guess.
Yeah, not a lot of critical thinking, unfortunately. No matter how many ways we put it to them, they couldn't wrap their minds around it. It's unfortunate.
So you guys started with a little bit of debt, hard money, and then you refinanced that in 3 months. And then did you go to a construction perm loan, after that? How long did it take you to kind of get through all of the entitlements and all of that to where you're starting that construction?
Yeah, we went to a traditional construction and perm loan. It took us about 18 months, which is miserable. And about a year of that was going through permitting with Nashville, going back and forth with stormwater. It became a mess because here's the thing. Nashville used to have requirements where developers had to redo the sidewalks or had to build sidewalks, which has since been declared unconstitutional. So we ended up not having to build sidewalks here. But when we initially submitted our plans, the city of Nashville came back and said, oh, hey, you've got to build sidewalks here. We said, okay, that's fine. We had that in our budget, whatever. Well, stormwater saw that and said, hey, now you're disturbing 10,000 square feet of soil. You have to redo all the stormwater. So we almost got into a lawsuit with the city of Nashville over it. Because, my argument was, you can't force me to build sidewalks and additional stormwater for you and then use that as leverage for me to have to re-engineer my entire site for even more stormwater. So fortunately, it ended up getting overturned while we were arguing with them, but it still took about 3 months.
I'm working on a little downtown TI, and we're going through this same headache. It should be it's a small old commercial building. He's going to take a liquor store out and he's going to put in a little live work, and we're trying not to touch any of the exterior. And he's basically gotten forced into doing a site development plan, which is going to require new sidewalks, new landscape, and probably another 8 months of permitting versus being able to take his tenant out and put a new tenant in, improve it, and go. It becomes a bit of overreach at some point. I'm surprised you got to hear that the new sidewalk thing is unconstitutional. I seem to run into that on most new developments, but they like to get their chunk of flesh.
It's too bad. I mean, you could see why some developers just kind of give up and start going with, worse tenants or whatever, because they don't have to make improvements to the property, which means they don't have to get a new UNO, which means they don't have to make any upgrades, all that kind of stuff, right? I mean, it's frustrating having to work with the city in that respect.
Part of it. If it was easy, I guess everybody'd do it. So
Yeah.
yeah.
And
But
look, Nashville's easier than Chicago or New York, so I'll take it.
yeah, always somewhere harder. I bet we're probably parallel, Denver and Nashville out there. What's your opening date on this?
So we're practically done right now. It's just I spent some time yesterday blue taping. I like to walk through and work on all of that. There's some sloppy drywall work for sure, so that's got to get cleaned up. Um, but theoretically, we could open tomorrow if we really wanted to. And considering it's the slow time of the year in Nashville, there's a lot of tourism in Nashville, fortunately, but December through February really is kind of slow. We figured we just hold off until March, give or take, unless our management team says, hey, we'll lose less money if we go ahead and open. But I have a feeling that their analysis is going to say, no, we're not going to be able to cover the additional costs. So let's just keep it closed.
Yeah. And then management, did you guys bring in a third party manager, or are you guys self-managing on this?
No. I didn't want to learn how to self-manage a hotel. I've got a property management company. We manage a couple million square feet of commercial space, but I didn't want to learn how to manage hospitality on my investor's dime. And so, this is the first hotel we'd ever done. And I decided to go out and interview as many groups as I possibly could. So we interviewed 25 different boutique hotel management firms.
Oh, wow.
Simply because I needed to learn the questions to ask first. And then, kind of dialed it in from there.
We did similar on the red. And again, it seems like it's across the board on percentages and numbers. What did you find were some of the key questions to ask for property management and some of the key metrics that you're looking at that different management companies offer?
Really it came down to, what do you have in your portfolio that is similar to this? What has been successful and unsuccessful there? Because at the end of the day, it's kind of like interviewing a regular property management company. The fees are all relatively the same, right? The structure is all relatively the same. It all comes down to, do you have experience with a product like this? What has that been like? Can we go see it? And, the company that we ended up going with, there were several that had product that was similar. It's not like this boutique hotel was super unique. They were on top of it. I mean, you could tell that they wanted the business. They had over 100 boutique hotels in their portfolio across the country. But I think within a week of our first call, they flew a team out to Nashville to come and tour the property and meet us in person. So that was pretty impressive to us.
Yeah, nice. Who's the group that you guys end up working with?
It's Remington Hotels out of DFW.
Yeah, nice. So what else do you have going? I know I saw a post recently on this Peerless Mill project.
Yeah, so that's the wool mill I was telling you about earlier that we bought. It's 29 buildings, 1.5 million square feet. I mean, it's just an absolute elephant of a property. We're finishing up 350 self-storage units there in 2 buildings. A lot of these buildings were built in the early 1900s, so we don't have any MEP. Everything has been ripped out. We've basically got shells of buildings. And now that I've got sprinklers to this building and water and some other things, we're probably going to build 50 to 100,000 square feet of flex space within that property. And then, eventually start converting it into more and more of a mixed-use town center. So, my dream with that site, it sits on 32 acres, is to create a true city within a city, to where if you never wanted to, you never had to leave the 32 acres. So we'll have, apartments, lofts, we'll have, grocery store, bars, restaurants, a brewery, distillery, creative office lofts, manufacturing. So it's a true mixed use, not just, hey, we've got some offices and some retail here.
That's cool. That's cool. I was down in Chip and Joanna Gaines, their silo project they did in Waco.
Yeah, Waco. Yeah.
Where, they kind of created this whole courtyard community. You've got some, food truck areas. They've got their showrooms. You've got a hotel, really unique opportunity to take a whole site and really recreate it. I'm curious, other than just like bold creativity of, here's Tyler's dream. How do you know from an analytic standpoint, like this thing's going to work, when you're doing a mix to create all of that?
It's a good question. So on this deal specifically, we bought it for just over $3 a square foot. Right. Industrial rents in that market are higher than that. It was just it was 1.5 million square feet. For me, I knew, okay, well, worst case scenario, if we just end up putting a distribution facility in here and that's all we ever do with it, it'll pay for itself. I'm really good at finding deals that if everything goes wrong, we can still flip out of it and make money.
Mm-hmm.
That's really my backup plan, is to make sure that we're buying them at such a good price that even if we spend money on architecture and development and we have to fire sale it, we still walk away with at least our money back. But also just studying the market and getting to know it. I know that there's very strong demand in just about every Southeastern market for warehouse for flex space, right? 500 to 2,000 to 5,000 square foot warehouse facilities for blue collar businesses, for podcast studios, for pickleball facilities, whatever it is. There's a lot of demand for that. People just can't seem to build enough of it. And so you do a little bit of market research, but you also make sure that you buy it at such a cheap price that it's going to have to work.
Build that margin of safety is what Warren Buffett would say.
That's exactly right.
If you're coming in on this project, then how much of this is going to be, owner driven versus looking for leases and other tenants, and then finishing out to those guys?
Yeah, it's a good question. I mean, we ended up deciding to move forward on the self-storage facility because the property needs a lot of work. It just does. At first, my investment thesis, which proved to be wrong, right? So I'm not always right, was the tenants will want cheaper space in exchange for having to build out their space. So, I mean, we were looking at $1 a square foot, $2 a square foot in rent, which is unbelievably cheap. But the tenants would have to build their own units out. They'll have to bring their own power to the space. They'd have to do the water. So, I mean, we were willing to do long-term leases for pretty cheap. That ended up not being a thing that tenants wanted to do. They wanted a turnkey space. So, I said, okay, fine. Well, if I'm going to invest this much capital into turnkeying a space, I'd rather make substantially more money off of that. And so, we invested about $1.6 million into the self-storage facility. It's 350 units. It should net about $30,000 a month. And so from there, we'll be able to take some of those funds and start to build out other aspects where we can then say, okay, well, we'll take, a year's worth of profits from this, and we'll build out this warehouse facility and turn around and rent that out for $6, $7, $8 a foot instead of the $1 or $2 before. But the tenants are sitting there waiting for it, So that's kind of been the approach so far. So we'll have a pretty solid mix of owner-driven versus tenant-driven leases there. We've even explored opening up a liquor store ourselves. We've even explored opening up a laundromat, RV and campgrounds. So there's a lot of opportunity. It's right now it's a matter of trying to figure out which direction we actually want to take.
So, in the Cauble ecosystem, you've got like a leasing component. And so I imagine that gives you a little bit of like back end knowledge and safety of, here's what the market rates are, and here's the people that would potentially fill these, and maybe a little bit of, encouragement or safety to go in on these developments. If someone doesn't have that, what are the team members that would be important, to build when you're going into, a project like this?
Yeah, if you don't have that, you have to have a great leasing team. You just do. And that doesn't mean you've got one team that you go do everything with, because every single leasing team is going to be different and better at different things, right? My team is rare because we have always worked on so many different things that we're capable of doing that. Most leasing teams are, you've got guys that are really good at taking vacant, worn down industrial product and bringing the right tenants into it. You've got guys that are better at Class A, national credit tenants. You got guys that are better at local regional credit tenants. So for us, what I would say to you, developers out there listening, is interview the teams and get hyper specific in your questions, kind of like what I did with the boutique management companies when we were looking at hiring them. What do you have in your portfolio that is almost identical to this? How did that go? Tell me the story. Because at the end of the day, most brokerage teams are the exact same. You've got people that are knowledgeable in the market. They're willing to go down and knock on doors and make the phone calls for you. But do they have the specific skill set or the relationships that will help lease your specific product? That's what's most important.
Yeah. And do you feel like going into 2026, this market right now, like what are the, how do you feel about it? What are the opportunities? What are the things that have been, hurting the last couple of years? Like,
Yeah, I mean, who the hell knows anymore? I mean, nothing's predictable. We had it's what is today, December 12th. We had an interest rate drop from the Fed yesterday, and nobody seems excited about it. Right? It's like, okay, great, that's cool. What's going to happen now? Traditionally, that would have been a massive, fuel on the fire moment for people to start buying more. We're not seeing anybody talking or reacting like that. I think that, I was having a conversation with one of my brokers earlier. She was asking about when we expect shovels in the ground on an affordable housing development that we're selling the land to, because a city park kind of hinges on it. And I said, I think it'll be 6 months. If it was 7 years ago, I could have told you to the day. But in this like post-pandemic world and post, quote unquote, Liberation Day world, I don't know that you can predict anything anymore. So for us, it's more about, hey, the fundamentals of real estate are still there. Let's just make sure that we are underwriting incredibly conservatively, that we're looking at every deal in a standalone silo, and we're being as intelligent moving forward as we possibly can be. That's all it is. There's still great deals out there. Even no matter how uncertain the market gets, there's going to be great deals to be found. You just have to be very careful and really tighten your belt when it comes to your underwriting and your approach, and this kind of all hands on deck mentality.
Yeah. So if the interest rates, aren't really moving anything, with this administration, what do you think with some of the like tax incentives that have come out with this big, beautiful bill? Do you feel like any of that is making any motion or opportunity, in commercial space?
I really don't. Look, I feel like tax incentives as a whole are always great for the industry. And I think that they're great in this case. It's always nice to have tax incentives to do anything. But when, life for the average American is becoming more and more unaffordable, it doesn't really matter what you and I build if people can't go shop there. It doesn't matter what you and I build if people can't afford to go stay there for 2 or 3 nights and enjoy Red Rocks, right? Or enjoy Nashville. And so that's honestly more of what I'm concerned about today is, what are we building that is going to be within the realm of affordability that people will actually be utilizing most? And I'm not alone. I mean, my mentor is the Nashville manager for a 15 or $16 billion private equity fund. And that's what they're worried about too. It's can Americans afford anything anymore? How are we investing in companies based off of that? So look, I don't think that any one presidential administration is going to crash real estate. I don't think any one presidential administration is going to create the biggest boom ever for real estate. I think that it's also hyper localized. There's of course uncertainty with tariffs and manufacturing materials. And, is lumber going to go up again? Who knows? Some of the prices never really came back down after the pandemic. And so that, of course, always throws a wrench into it. But in my opinion, no matter what's going on in that world, it's how are we being nimble with what we have to deal with today? Because despite how good or bad it is, you have to be able to take advantage of what's in front of you, right? And I think that's what's most important to keep in mind.
Yeah. It's kind of, everyone complains when the interest rates are high. As soon as, they drop low, well, then the prices are going to jump. So, the opportunity right now is that it's a little more affordable. A little people are a little bit more hungry, at least in our market. And having some creativity and foresight of what can you put into it becomes like this key question. Which kind of goes back to this like market study, gut feeling, hyper local, knowing that laundromat's looking for a new place. On the tariff question, with our hotel, we had all of our FF&E packaged up, milled in Indonesia, and we had already put deposits down for a whole 22 unit boutique hotel, all of that coming from Indonesia. And, we ended up with a 25% tax on top of that base order, that we're having to absorb. So it definitely gets felt in the construction, at least on some of those things. I don't know. Are you seeing that much with your construction costs?
No, come on, Zeke. Everybody knows Indonesia's actually paying that, not us. I mean,
Right?
yeah. Look, it costs us substantially more on our FF&E. The one thing that we think back on is, hey, fortunately, we put everything through India instead of China, right? So we didn't have to pay as much. But yeah, I mean, look, we're still ordering, minor things here and there. My designer yesterday or a couple of days ago placed another order for furniture and rugs and stuff like that. And the company immediately called her and said, "Hey, here's what the tariffs are going to be on that product. We need you to pay that because we're not gonna front it for you." So it's like, okay, well, that here it is. Um, it's and of course there's always the pushback of, okay, well, why don't you just buy American made rugs? Well, I would love to. The problem is there aren't American made rugs at the pricing that we need to buy for 48 rooms that can also supply that quantity as quickly, right? So it's just not that feasible. And if you want to remain competitive in the marketplace, you got to think we're competing with Sleep In that's still getting the cheapest, rugs possible from China. It's just it's a very nuanced conversation, which is why people get so confused or angry about it. I would be the first to say I would rather support 100% American companies if it was possible, but it's not feasible in every aspect of what we have to order. I mean, think about where our timber comes from. We're not cutting a lot of American forests down. We're getting our timber in from Canada. Well, if we've got a tariff on Canada, everybody is now paying more for their lumber, and that's going to have to be reflected in our hotel room rates. It's going to have to be reflected in our single family home costs. It's that those costs just don't get absorbed into the ether. Somebody's paying for it.
Yeah. All of these are like forced behavioral changes, is kind of what I see the taxes as. Like, hey, we're going to set up carrot and stick. And, if the incentive is to, grow American made businesses, I guarantee, saying we would love to purchase American made. And when we compared both, there was a, considerable upcharge. And when we're looking at trying to meet a budget, to do American made versus, importing in, my hope, and we'll continue to look local, and we try to bring in as many, local craftsmen as we can. And we do that. Is that, not just immediately paying, but over time, like, maybe we do bring in more cabinet millwork that's local. I mean, those are things that can be on the ground. So maybe we'll see some of that shift. It's just we're in that season right now of like, yeah, you're gonna fill it in your pocketbook and your projects in a market that's already a little bit sluggish with bad interest rates and unaffordability. So it's kind of this, add on to the grind.
Yeah, I mean, look, I don't know a single developer that wouldn't mind spending 2 to 3 times more on their FF&E budgets buying 100% American made. The problem is on the back end, you're going to have to charge substantially more to make your margins on that product. And so the problem is renters aren't just going to rent more because, you're buying American made product. They can't just magically pay twice the amount of rent, right? Same with, buying units, same with, staying at a hotel. People aren't just magically going to come up with more money. So that's the real problem. I don't think that anybody would sit there and argue, no, we shouldn't have American made goods. It's just, it makes the entire project financially infeasible.
Yeah, or can. So what's the secret? How do you fix that, Tyler?
Oh man, I wish I knew. I wish I knew. I mean, look, I think that, look, we're in a global economy now. It is not the 1800s anymore. You can't expect to, have better pricing locally. It's going to be competitive across the world. I think, not having tariffs, I think realizing that, hey, manufacturing is actually probably, and I know we've gotten so far off topic with what we were really supposed to be talking about, but I mean, it comes to like supply chain is very important when you're developing these projects.
Yeah.
The stick, in my opinion, just hurts people. I don't think that manufacturing is ever going to come back and create nearly as many jobs as anybody thinks that it will. Because most of these factories, most of these manufacturing facilities today, and I've been involved in making some of them happen, are so automated that they hardly create any jobs. So they're not going to be the Band-Aid solution that is being touted. So I mean, if you think about that, like, okay, tariffs are supposed to, really increase investment in manufacturing facilities in the United States, which will then create no jobs or far fewer jobs than expected. I don't know what that benefit is going to be. Why don't we find a way to really incentivize American companies to I don't know, go through some form of new design, development, whatever that is, to create better products here and then become more competitive that way. I don't know. I'm not an economist, man. There's a reason I'm not the president. That's a very tough question to solve, and you're going to have a whole bunch of people that hate you no matter what direction you take.
Oh, so, yeah. It takes a lot of bravery to be the developer because you're the guy that's like breaking through ice and trying to create new spaces and one way or another you're ruffling feathers. Let's talk about a couple of carrots on the tax incentive side. Have you dealt with or looked into? We're getting ready to start a project. It's got historic designation. So I'm going to start digging into like historic tax credits. It's also in an opportunity zone. So both of these things sound like, hey, these are some incentives that, could create, and offset some of these costs. But I don't know what those numbers or how that process looks like. Have you dealt with either of those?
Yeah. So opportunity zones for sure. I mean, the mill that we were talking about earlier is in an opportunity zone. We definitely took advantage of that. Tons of benefits there. I really like that.
Can you give me the 101 on what opportunity zones are, how to take advantage of them?
Sure. Yeah. Opportunity zones were designated by Congress as areas where they would like to see more investment, right? At the very, very most basic definition of it. And so in order to incentivize that, they said, hey, if you have capital gains tax and you place it into these zones and make a certain amount of improvements, then after 10 years, if you decide to sell that property, you don't have to pay any capital gains tax, right? So it's a way of actually getting out of the 1031 exchange, quote unquote, kicking the can down the road cycle. So very interesting, right? So you could sell all of your stocks, put it into an opportunity zone, and pay no capital gains on that sale if you follow the steps right. Same with any real estate, same thing, right? So
is there a time zone? I think that's one of the critical things with the 1031. It's like 18 months or something like that. So you got to secure something. Does these opportunity zones have the same, like, I got to sell and put it in here quickly? Or?
Yeah. So 1031s, you actually have shorter time than that. It's like 180 days. It's very, very quick that you have to actually close on these assets. And so, you kind of want to identify these pretty quickly. There's some OZ funds out there that you could put your capital into as well. Historic tax credits, though, we've always stayed away from it. I love the idea of it. Great in principle. The problem is the restrictions that they put on you for what has to be put into that property are like windows, for example. I have to go back and basically have custom made windows for my buildings because they got to look historic. Well, I could get windows that look 90% of what's there for a tenth of the cost. And the tax credits don't cover the balance of the expense. And so every time that we've looked into utilizing historic tax credits, they don't pay for the substantial additional expense and time that goes into a project to make them worth it. We've done tax increment financing on a project. We just did a TIF. It was like the first TIF in Nashville in over 10 years. Essentially, we go in, we work with the city to determine how much of a tax basis they will receive from this specific project once that it is done, because we're master planning essentially a new downtown for a neighborhood. And they will give us the money up front to make the infrastructure improvements for that site. So to build roads, to build water, sewer, electric capacity, whatever, which can really add up when we're talking about a couple thousand apartment units and a couple 100,000 square feet of office, retail, all that kind of stuff. But outside of that, man, to be honest with you, we tried to keep our capital stack as simple as possible.
Mhm.
I just like to go out and raise equity. I like to get the debt. Could I squeeze a couple of points here and there if I really started spending time to figure all the other stuff out? Maybe. But at the end of the day, none of it's guaranteed. It's going to take you a lot of time, a lot of paperwork, a lot of headache. And I kind of like the program that we've got. So that's kind of how we operate.
Yeah. I mean, I kind of look at it as icing, but not the cake. Like,
That's right.
does it already, taste good? And if so, like, let's move it ahead. And then let's look at some of these other things to, you know, help offset tariffs and additional costs.
Exactly.
We ended up with a small TIF where we basically redesigned our building and did some exchange because they wanted a lower height in the front. And we did some trade on a additional cost to us in order to get the city some of what they wanted. That was my first experience with a TIF, and it was basically the city attorney kind of offering and negotiating. Is there any rules of thumb, when you're looking at negotiating a TIF and, how to put those in place? Is there experts that come in and help put that together to, maximize what you can do on a TIF?
Honestly, the best thing that you could do to maximize TIFs is to just hire the right attorney that has gone through structuring and organizing TIFs before. We had a phenomenal team on that. I mean, here's the thing. We had never done a TIF. The city hadn't done a TIF in 10 years. So nobody there really had any experience, but we had the right attorney involved that was really able to help everybody kind of structure this the right way. So that's what I would say is just, don't try to become an expert yourself. Just hire the right team that will help really carry this across the finish line for you.
Would you start early with that conversation? Like, do you ever, or is that always something that's, added on as you're working through a project and you've got, hey, the city's wanting us to do, new sidewalks. Yeah.
Yeah. Yeah. I would definitely start early. If you can. I mean, look, they're only going to want to do TIFs typically for projects that are of scale, right? I mean, the project that we did a TIF on is a 32 acre mixed use site where we're going to be building close to 2.1 million square feet. So, it's a pretty large project. The city is very invested in it, and they can show, hey, we're going to make some pretty decent tax money out of this. Once this is developed, let's help spur this development. So, I mean, if you're doing a little 3-tenant strip center in your local neighborhood, probably not worth spending any time trying to do that on.
Yeah. What would you say is the kind of the cut point of, hey, makes sense to look at TIFs, or it makes sense to, look at opportunity zones? Like, what size project?
Opportunity zones, any size project, right? TIFs,
Okay.
though, I would look at because every municipality is kind of different. So I would just start to study TIFs in your local area, figure out what projects are getting approved for TIFs and kind of how that process looks. Because if it's a pretty strenuous process, which it typically is, it's really not worth going through that headache unless you've got a project of scale. Simply because, I mean, the amount of money that you're going to spend on legal fees to get it done, the amount of meetings that you have to have, we had to go before so many different boards within, Metro Nashville to get this approved, and is well worth the time. But that's because it was a big enough infrastructure project that it made sense.
Yeah. Yeah. Well, cool. You got a lot of ecosystems going. You got your lease company, your development company, your education company. If people want to work with you or step into your ecosystem, what are the best areas for people to do that and contact you? What all do you have going on that's an opportunity for people to, if they're interested in getting into development, to work with you, Tyler?
Yeah. I mean, I think the best thing to do, of course, we're always raising capital. So if you ever want to invest in one of our deals, tylercauble.com/invest. But look, the best way to connect with me is through YouTube. I've got all my contact information on there. Got over 650 videos at this point teaching you how to go through this process. And that's just under my name, Tyler Cauble.
Yeah, great stuff there. Again, like I think you're doing a great job educating, developers coming into the commercial real estate space. There's not as I don't think anybody out there is as accessible. Here's the real deal of what it takes. So appreciate you putting it out there. Appreciate you coming on the Radical Hospitality Podcast. Tyler's been great to get to know you.
Appreciate you, Zeke. Thanks for having me on, man.
You bet.